and thanks for joining me today. My name is Matt, and I'm super excited about today's episode because this is going to be the very first Watch List Wednesday. Now, yes, today is Thursday. My mistake. I got a little busy yesterday and just didn't have the time to make this video, but the goal is to try to get these out every Wednesday as soon as possible, or on a more consistent basis. And so what we'll do each week, just kind of a high-level overview, I don't want this video to be too long, is we'll just review one company's stock. We'll go over if we think it's a good fit for a portfolio or if it's a good investment. We'll analyze different aspects of the business, and then if we decide it's a good buy, we'll go ahead and add that to a little mock portfolio I made and include that on a paper trading. Then what we'll do over time is just monitor the process that we've made with these positions and see if ultimately we've been able to build a successful portfolio. So the very first company that we are going to analyze is going to be Peloton. Peloton is that company that makes those stationary bikes. They also have treadmills for at-home workouts that are hosted by live training sessions or on-demand sessions. So they're relatively newer of a company. So a little background, Peloton started in 2012. They actually started production and selling their units in 2014, and they became public in September of 2019. With that being said, they're obviously a very new company, and unfortunately, it wasn't that easy to get that much data on them because they've really only been around for like 2 quarters or so. So there's not a whole lot when it comes to the number side, which might make this a little risky of an investment, but that's what we'll talk about today. So to start, I'd like to go over the pros of Peloton, or the things that I saw that I liked when I was researching Peloton. So one of the first things I look at with companies, especially new ones, is to see who's in control of this company. It looks like currently sitting on their board is 4 of the co-founders. Now, there might have been more along the way, but that's something that I actually like to see with new companies, because when you're a co-founder of something, you treat it as if it's your baby. You're not somebody who's just come in because they've been hired with management experience and are going to take over this company to drive up the share price. There's more of a focus on the quality and intention of it, I feel, when this is something that you've truly built from the ground up. The CEO of the company, John Foley, is also an experienced CEO, and this isn't his first time building up a company. He's had other companies in the past, which is another thing that I like to see because it just shows that he has experience when it comes to running larger companies as well as building companies from the ground up. I believe the one that he built from the ground up, he actually came in a little later. He was an original co-founder, but they ended up selling. It was called citysearch.com. And the other thing that I liked about Peloton is that they have an extremely high net promoter score. If you're not familiar with what that is, it's basically just a ranking system to see how much clients enjoy using your product, how much they like your company, all of that good stuff. So, it's generally on a scale of -100 all the way to 100. -100 meaning everybody hates you, 100 means everybody loves you, and it's also worth noting that nobody has ever actually had a 100 net promoter score. So Peloton's net promoter score came in at around, it has like a low of 87, a high of 94, which is incredibly high for any industry. So even comparing it to other industries, it's just really high. The only company that's had a higher net promoter score than Peloton is Tesla. The other thing that I really liked about Peloton is that they have an extremely high retention rate for their customers. Again, just meaning that over a 12-month period, these are the amount of people that keep their subscriptions. So their retention rate is 94%, which, to make that number a little bit more realistic, the national average of gyms, so gyms that you go to and work out, is 75%. So it's almost 20% higher of a retention rate, which means that people are using this product and really enjoying using this. So much so that they're going to continue paying the $39 or $13 a month to use their products and services. For a newer brand, Peloton has done also a great job of building awareness or engagement with their products and services. They have meetups where people will, in different areas, meet up to go on runs together. If they open up a store, everybody shows up so that they can participate in the unveiling of this new store. So they have a very engaged group of customers that enjoy almost creating like a society around Peloton, where it's just people that are interested in, healthy lifestyles and active living. So that's always a great thing because that is definitely a way that they're going to help boost their net promoter score, but also it's just a good way for them to get the word out. If people are constantly seeing groups get up together to run together, meet up, go to these unveilings, it's going to create interest. And so even if not every person that has interest in this is going to buy one, it still just is going to help put the name out there and really establish them as the industry leader when it comes to at-home exercise equipment. I don't believe they are currently the industry leader, and there's other companies we're starting to see rapidly come up following behind them, like Tonal or that mirror thing. So there's definitely competition out there. Peloton's one of the first to go public of them, though, and they also seem to have the highest amount of brand awareness when it comes to this industry. They also build a quality product. They take a lot of pride in the products that they produce. The CEO, John Foley, believes that their tablets that they have on their bikes and treadmills is actually better than Apple. So they set themselves to a very high standard of creating a product that people are going to enjoy using and something that isn't going to have a lot of mishaps or glitches or anything like that. I actually, in doing research for this video, watched a few people's reviews on Pelotons to see what the customers actually had to say. And I saw multiple people that were using this product for over 2 years. And they said aside from it getting really sweaty and sometimes having some dust on it, it performs just as it did since day one, which is a great thing to see. These bikes start at around $2,000, so that's not something you want to have to replace each year. It wouldn't make sense if you had to replace it each year. So if this is something that can be built to last 5-10 years, that's going to be great to see. And it's also going to create more interest in owning a product like this, knowing that it's not something that's going to break down all the time or that you'll have to be consistently replacing. One of my initial gripes when I first heard of Peloton is that not everybody really likes just riding a bike for exercise. There's so many other ways of exercising, and again, not everybody just enjoys sitting on a stationary bike. I know spin classes are popular, but it's not everyone's cup of tea. But that's clearly something that they thought about. They are coming out with a treadmill. I believe it's already out, but they've had to kind of pause the delivery of those given how everything's going right now. So they are developing an expanding product line. They also have an app that you can use. So if you don't have any of their actual devices, then you could still use their app. That'll cost you about $13 a month, and that'll still give you training classes. Think of almost like a P90X, but through Peloton. The big difference between something like Peloton, though, and P90X is a buy once and that's all the money they'll get from you, where Peloton is an ongoing commitment. So each month they'll start collecting that money from you, and it's an ongoing basis, which as an investor is something I like to see, because I like to see that profits can continue to occur and it's not just a one and done kind of deal with clients. I should also just mention that the product line isn't simply limited to just the equipment that you use. They also have like free weights that you can purchase from them, yoga mats, clothing, all of that. So again, just another way that they're able to get that brand awareness out there is by having items with their name on it so people can wear out in public and really start to draw that attention. It's kind of like a repetition thing. The more and more you see a logo, the more and more you get interested in it. And so having items like that available is almost a given, but it's commonly overlooked as just another way for essentially free advertising, or almost having people pay you for advertising. And the other thing about Peloton that really stood out to me is that they have a really competitive pricing. So what we'll do is we'll put aside like startup costs, because it's hard to compare like initiation fees at a gym to the cost of a Peloton. But Peloton's biggest competitor is Orange Theory. And Orange Theory's pricing, this varies state by state, so take it with a grain of salt, but starts at $59 a month for 4 classes, where Peloton starts at $39 a month for unlimited classes. And also, it's from your home, so you don't have to go to these places, again, worry if there's something going on where you can't do your exercising, and ultimately is still giving them the ability to produce income while things like this happen. So right now, Orange Theory is not making any money and they're sitting on a lot of liabilities, where Peloton is going to continue still making money from their monthly subscriptions because people will still have the ability to use it. And also, if anything, there's probably more people signing up right now. Full disclosure, this is not a sponsored video at all, but I did see on their website that they're doing a 90-day free trial for just their app. So if that's something you're interested in, that ends April 30th. So go ahead and check that out. You get 90 days for free, so 3 months free. And, no excuse to not try it out if you don't have a membership or aren't doing something else that's keeping you active already. So now I'd like to talk about some of the cons or the negatives that I saw with Peloton. And these are definitely going to be more opinion based. All of the pros and cons really can be opinion based, but these are more my opinion. You might see them otherwise. So, again, take all of this with just a grain of salt for now. But one of the things that they have are those in-store classes. So Peloton is positioning themselves in high-end retail places, typically malls, where they have stores for people to go try out the Pelotons, which in theory sounds like a great idea because nobody's really going to be willing to just shell out $2,000 without having used a product before. Some people will, others would be extremely wary of situations like that. So I get where the idea is, and they have these huge unveiling parties for every time they open one of these stores, but high-end locations are expensive. And again, in times like this, they could be paying rent on these spaces. These are bikes that aren't able to be sold for them. And I'm pretty sure it's just a free thing. So I get it. It's an advertising strategy. But when you are taking up space in a retail, so like a mall, and in a high-end place, odds are you're going to be paying a lot of money. So for a new company, I'd really like to see that money going to other places, either new products or lowering other costs, so that they can really start to grow and show that they can be a profitable company. The other thing I would like to see change with them is their delivery service. So I love the idea that they have somebody who works for Peloton bringing you these products. They'll show you how to use it. They set it up in your house. But what I don't like is that it costs $250 to have these delivered. I know what they're paying for, but that's really expensive. So on top of paying, $2,000 for this bike, you have another $250 that you'd have to spend to get it delivered to you and just have somebody bring it upstairs or wherever you're going to put it and then show you how to start pedaling. I would like to see that maybe cost around $100. To me, $100 for that would be worth it, so I can have making sure that the device itself is being taken care of in the delivery process. They test it out to make sure it works so everybody gets a completely functional system. But again, that price point at $250 is just more on shipping than I know myself and many others as the consumer are really willing to spend. And maybe even if they could make that an option, I know that might hurt their net promoter score if they get a bad delivery person, but maybe making it an option or having a cheaper alternative than that $250 just to have it delivered to you. This isn't necessarily a fault of their own, but a con is, for whatever reason, they're stopping the delivery on the treadmills, but not the bikes right now. And I get why they're stopping the deliveries because of virus, people going into other people's houses. It definitely makes them prone to getting sick themselves. I don't understand why it just changed though for the treadmills and not the bikes. And no research really indicated to me why that's happening. So that's something that was a little concerning to me, is maybe if there's some other underlying issue with the treadmills, if they're not as functional as they want them to be, if they found a glitch in the system with the treadmills, maybe they don't have enough training courses for that to really be going out right now. But that's something I would have liked to hear a little bit more about, and really is something that's kind of being thrown in the dark. So I'm interested to know why just the treadmills have stopped being delivered. I know too, one of their biggest costs or expenses is their streaming music. That's, again, an area I'm not a complete expert on, but I know that streaming rights to using this music is very expensive, and they feel it's a necessity. So, of course, we weren't able to see exactly how much they're spending in streaming music. I'm sure I could have if I paid for some report, but I would maybe even like to see if they have these studios, maybe acquiring a little additional space so that they can have almost like a music studio and create their own platforms, or have a way for people to integrate their own music on there, or even, hire people to make music for them, or just say, hey, we'll pay, I don't know, $100 for a song if we like it. And then that way they can own the rights to the music. So that streaming, to me, again, I get it because music and working out go hand in hand and they're very important to a lot of people. But I don't think necessarily people are going to be wanting to listen to like the most popular song every single time they're working out. Maybe they can find just music that's a genre that people like, but ultimately just something that's not going to eat away at any returns they have by having to pay for the streaming rights of the music. Also, their 12-hour live streaming classes are solely based on the East Coast. So if you live on the West Coast, those times might not be as convenient for you. So again, I know just a few minutes ago I was talking poorly about having multiple locations, but maybe close some of those locations and use that money to open up a studio in Los Angeles or somewhere in California or Washington or something. So that way they can cater to the West Coast as well as the East Coast. And maybe can go from having that 12 hours a day. I'm sure there'll be some overlap, but we can even call it like 20 hours a day. That way it's at a convenient time for anybody, regardless of where you are in the country. And I guess probably the last gripe that I have when it comes to Peloton, or at least from the research I saw, is for a company that's not profitable and for a company that's still developing itself. I think the CEO is wildly overcompensated. His total compensation comes in at $27 million or something along those lines annually. And yeah, that includes like stock options and all that good stuff. But generally, when I'm looking at companies, especially startup companies, I would rather see a CEO take a significant less cut of how much they're being paid and put that money back into the business. I think right now they have the bike and treadmill. That's great. I would really like to see one of those mirror things because I think those are cool because that also is just another way to have like a full body exercise. I know the other two are full bodies, but again, just like cardio workouts isn't exactly everybody's cup of tea. So some people might want something like strength training or stretching, the yoga that's available on the app. So again, just maybe I'm thinking that the CEO would maybe do better for the company if he wasn't paid as much and ultimately just put that money right back into the company. And so now we get into the exciting part, the number side of it. So hate to be the bearer of bad news, but with newer companies, there's not going to be as much information out there. So this is going to be a pretty quick section. But the only numbers I was really able to find, actually, let me backtrack. So with this being a new company, we don't have that many months to really go back and look at how they've been spending money or really that many quarters to go back and look. So I wasn't able to do a discounted cash flow analysis for this one, unfortunately, just because I didn't feel that there was sufficient data for us to really get an accurate number on that. Also, since they're not profitable, they don't have a PE ratio, so there's nothing like that we can base this off of either. They're not paying dividends, clearly. So the only number I was really able to find that was something I felt of significance was their current ratio. So if you don't know what a current ratio is, all that really is it's just taking their current assets divided by their current liabilities to get the number. And so 1 means that that's perfectly balanced. If you get a current ratio of 1, if it's below 1, that means your liabilities is exceeding your assets, which could mean that you're having problems paying off debts that you might have. And if it's above 1, then that just means that you have more assets than you have liabilities. And so Peloton's current ratio, from what I saw, is 3.47. So that does mean that they have a higher amount of assets than they have liabilities, which, depending on how you view it, can be a good or bad thing, just because that's pretty high. A lot of times we like to see about a 2 for a current ratio. 3.47 is pretty high for a new company like this, but that could mean a few things. It could mean that they are not putting enough money back into the business to help it grow, or they're not paying off debts the way that they should, considering that they're not profitable. But at the same time, it also could mean that they're hoarding cash or holding on to cash right now so that way they can position themselves well if anything should happen during this pandemic, which is always a good strategy, is to have some reserved cash for situations just like this. It could also mean that they're looking to expand their product line, so maybe including one of those mirror things, I can only hope. Or it could also just mean that they're looking to, take on a loan. And if you have a higher ratio, you have a better chance of getting a loan, which hopefully they would be using that to put back into the business and not give the CEO another raise. Because since they've started, the CEO has continued to get a higher and higher compensation, and they still haven't been profitable. So, yeah, I know I'm kind of harping on that one. But that was really all I was able to find when it comes to actual financials about this company. So I guess that leads us to the final portion of this. Is this something that is worth purchasing or adding to our watch list? And from my conclusion, I would say yes. I think Peloton is worth investing in. It might be a little speculative of an investment right now, just given the lack of information out there about this company. But one of the biggest things, or a few big things that really stand out to me here, is the high net promoter score, showing that clients really like using this product and they're willing to talk to people about it. The high retention rate, so people continue to pay that monthly subscription for their services. And also the CEO has a really good vision, and the board of directors has a really good vision for where Peloton wants to go. I know one of their biggest goals is they want to be the first company to have a 100 net promoter scores. That's going to be tough for them, I'm sure. But ultimately, that just means that they are very conscious of the brand awareness, and they really are focused on creating a pleasurable experience. They're always looking for new ways to expand, ways to create a better experience using their products, and they build a very good quality product. Again, this isn't something that looks like it's from the 70s where you just see like red dots flashing. This is like a nice screen that you're looking at with live classes on demand. You can engage with the trainers. They have very high quality trainers. So their focus to me is exactly where it needs to be. And so again, I do think this is a company worth adding to the watch list. So let me explain how that's going to work. All right, and so for the way the watch list is going to work is I have the E-Trade paper trading pulled up here, and I should be recording this on my computer. All right, and so you see that I have the E-Trade paper trading account here on my computer, or hopefully I was able to get that to work and you can see this. So with this, just a little overview, it gives us $100,000 of fake money that we can spend. So for this and to make it lasting, what we'll try to shoot for is about $5,000 per company. We're not going to worry about a sell date or quantity of shares or anything like that. That would probably be a better approach at least. But just to keep it simple, we'll try to get around $5,000. So if you can see my screen here, what we're going to do is I'm going to just buy this at market. I'm not going to worry about limit orders or anything like that right now. So we're going to go ahead and do a market order at whatever it is. And we're doing 150 shares, which will get us about 5,600. Maybe I should make that 140 instead. Maybe 125. I could have used the calculator too. All right, we'll find it in the middle and we'll go with 130. 130 is close enough for me. I'm cool with 130 shares if you guys are. So we'll go ahead and we'll put in an order for 130 shares of Peloton. It's going to be around $4,900, which is cool with me. So we'll send that off. And that has been placed. So now you can see that we have this nice portfolio here. This is our actual account. So we'll just monitor this each week as we add them. I also have a spreadsheet that I'll be tracking this on, but I'll do that on my own, and I'll show you next week how that's going. So it might be a little easier for us to track it that way or using this. Not sure yet, but hope you found that helpful. Again, this is something that I would like to continue to do each Wednesday, not Thursdays like today. So hopefully we'll be able to get this ball rolling with this, and each Wednesday we'll review different companies. So my ask for all of you that have taken the time to watch this is, if you have any companies you'd like for me to review, please leave that in the comments section down below. I do spend a good amount of time doing the research for these, so I won't be able to get to all of them obviously, but I'd love to hear your input. And until maybe I start getting some feedback, I'll just start thinking of companies that I would consider investing in, and we'll do this each week. As always, you could be anywhere in the world, but you're right here with me, and I really appreciate that. So thank you for taking the time to watch this video today. With that being said, that's a wrap for our very first episode of Watchlist Wednesday. So go ahead and get back to the rest of your day, even though it's Thursday, don't get confused. But get back to your Thursday, and I will see you next time.